morning, everyone. For anybody who might be watching me, just giving you an FYI of what it is that I'm looking for, what it is that I'm looking at. These are all marked out volume levels that I think are applicable according to LTA Concepts over the last couple days. They shall be labeled accordingly if you've read the context at the end of the ebook. Couple notes. I have a position marked out here from the beginning. I didn't quite get into it based on time, but it's still an applicable position, and I'm doing it for forward test practice. I did try a small add-on up here that got stopped out. I was basing that off the 15-minute, expecting 6 a.m. hour to possibly take out liquidity, filling in this vector candle and reaching up into this order block. We didn't get that. We got to retrace back, and we're building trend lines on the top. So I'm still expecting a potential move up at some point. But keeping in mind that this is a Monday, Mondays are usually consolidation days. Although we had a funky week at the end of the week last week with the Thursday reversal, and then Friday NFP didn't really give us anything spectacular as we had an inside day. So I'm looking at the liquidity being intact from Thursday, possibly taking range lows or range highs, and then deviating back into the range to create a consolidation Monday. But anything can go. So what we're looking at a little more refined is we had Friday's daily open, which is this yellow line right here. We created a lower wick here, but it also created relatively equal lows. So we've got a decent amount of liquidity sitting down there that can be tapped. We've also got the rest of this fair value gap here that hasn't been filled out. So deviating this trend line, giving traders a fake breakout, filling this fair value gap could be the rebalancing that we're expecting for today, and then have a deviation down towards the lows. So this kind of ideas that I'm setting up for, and then looking for candle creation. The reason that so this is a valid 30-minute entry model based on the fact that we had the previous day value area high, previous week POC. We respected that with our 30-minute candles. We had one wick, we had a flip, and then the third wick as we pushed above the close on the second wick would have been a model entry 1. I don't have a fixed target right now. I'm just looking at the top of this range, but I'm looking for ideally to reach into here with the possibility of obviously taking liquidity off the top. We have a larger time frame liquidity sitting above this trend line here, which we've been respecting for a few days, so I'm expecting that to get merged at some point. We also have this orange line, which is our previous Sunday open, and then this orange line right here, which is our current Sunday open. So we could see reactions off of those levels, and we're keeping that in mind. Being a Monday, I'm trying not to take too much off the range. The idea will be to, if I get into another position for managing this live forward testing, it will be taking profits if we get a reaction at the Sunday open. We also have Asia high here, which align this a little bit better. Is the high of the 1800-hour candle from last night or yesterday evening. So we still have those highs intact. And although we drove down towards this PM level low, we usually see Asia sweeps and then tapping that PM level is a common thing for NASDAQ. It didn't happen. It came down low, creating those equal lows. That's why I'm continuing the possibility that we get some kind of liquidity imbalance on the top side here, and then we reach down for those, potentially reaching down towards our equal lows from last week, as I covered in my previous idea. So diving down into candle creation, trying to find ourselves an entry. You can see that we had our 30-minute idea that is still valid. We've got this yellow box that I've highlighted here is a small lower time frame consolidation that I'm watching. So as we're about to purge the bottom of this, we could be getting a manipulation, giving us a potential entry. We're looking at getting close to 6:15, so we have a new 15-minute candle starting in 5 minutes. So we're going to try to keep that in mind. We have this previous 15-minute candle open that we can see manipulated, taking everybody out from quarter after 5 up until the 6 o'clock hour, so there's some liquidity sitting there internally. And then looking at the 4-hour candles, where my idea is basing here is this is marking out 6 a.m. So between 6 a.m. and 10 a.m. is our 4 o'clock candle here. So we had an indecisive 4-hour candle here, and we're currently putting in what could be potentially a lower wick. We have relatively no wick off the top of this, so I would expect we could get a push up. So this deviation down lower we're going to watch as a potential entry point. In a few minutes I'm going to look at pulling some internal lower time frame ranges to see if we can get any more volume confirmations at these lower sides. But that's essentially what I'm looking at right now. If there's any questions, let me know. I'm still practicing, so don't take my signals if you don't know what you're talking about or looking at. But hopefully you enjoy. So you can see we just got a potential manipulation to that consolidation, but I'm not sold that this is the low of where we're going to go to. We are currently respecting this fixed POC right here, or sorry, fixed value area low here. This would be the range since we dumped at the London. We're going to watch to see where we go with this. Currently have hidden divergences in our momentum from here to here. We've made a lower low here. I don't take entries off of momentum. I just like to filter my ideas based off momentum. We seem to be getting some kind of reaction here. I'm going to see if we can continue with this. So an ideal potential setup. And again, keep in mind that this could just get wiped or on a Monday, but our new 15-minute candle that's starting in a minute and 15 seconds, we could see a lower wick put in there somehow, and if we do, I will be looking for continuation with our divergences. If I have lower time frame divergences showing momentum purging, then I will look to get in on a micro change of character with a retrace into 50%. My entry model that I like to overlay on top of the LTA Concepts is once I see all of my confirmations met, my last confirmation, which is my entry model, would be a change in character of some sort, and then retracing down into 50% of the leg that changed the character, looking for an imbalance. So if a volume balance is optional below 50%, I'll take that. Otherwise, I look for a fair value gap, but it has to be a pretty convincing fair value gap, because on these time frames, it's not hard to get one. Just an idea of what I'm looking at. While we're waiting to see if we get any more move here, I want to make an service announcement, if you want to call it. The way that I trade is I scalp. I use relatively low percentages, so if you were to take any kind of trade, you need to make sure you know what you're doing and understand what it is that I'm trying to do, and accept the fact that we could take multiple stop outs before we get into our position, as we're targeting much higher win rate, or sorry, much higher risk to reward ratios. So we're accepting the fact that we can take multiple losses, so do not be risking large amounts, as we might, as fishing for these positions, we could take a few stop outs. So so far we've had our 15-minute candles respect this fixed value area low, setting us up for a potential Model 1. We could see a close of this and a re-dip back down low, so we're trying to stay conservative, but I am lining up for a shot here potentially, as we have a hidden bullish divergence on our 1 minute, and coming back down to my entry time frame, we had this small break of structure here on this low change, and we had a bullish divergence, and you can see the momentum dipping down quite low here. So I'll be looking to take a small tiny entry off of here. Nasdaq, I usually account for a $2 spread, so I'll be looking at the low of this swing, minus $2 for my stop potentially. We did just get a reaction off of this fair value gap in here with a bullish divergence on a smaller time frame. I'm not taking that, as I don't like to target fair value gaps as much. I'm looking at this imbalance down here, but this is possibly where we're going to get the reaction from, and I'm just okay with that based off my models. So you can see here, off our fixed value area low, we had a Model 1 complete. So we had a wick, we had a flip candle wicking, and then the third candle reached down, and then as we passed the open, this could have been a position potentially. But like I just mentioned, I don't look for those. I have a smaller internal confirmation, and I didn't get it. So you would have been looking at a position like this, potentially taking out the high of this consolidation, putting in the expansion. But I'm okay with waiting, because I don't like to take the Model 1s solely off of the lower time frames. 15 minutes already a little bit too low. So looking on the 30 minute, we're just setting up our first candle, which has respected it, so we could very easily see a wash down lower. But for the more aggressive side of it, we have our 15-minute candles, which have respected it. We're working on our second flip candle, so ideally for this Model 1 entry, seeing this hold as a flip, and then seeing a lower wick put on our next 15-minute would be ideal. That's kind of what I'm looking at and why I'm holding out for what I've looked at. But you could have essentially had a small minor scalp, looking at trying to target the highs here, but could have easily taken profits at this imbalance here, which would have been in the premium of this dealing range as we manipulated the low of this consolidation. So you could have had TP1 with stops moved to break even, looking to target higher on that 5-minute idea. We're still watching. We did make a still have our previous day value area high, which we've been reacting off of, and we can see another reaction off of. So we plunged down and took Asia liquidity, but we never made a second purge. So essentially anybody longing the liquidity pull off of that would be in their position with stops below here. So we have to keep all that in mind, considering we're on a Monday. Mondays are usually consolidation days. Consolidation days usually mean liquidity pulls off of both sides. So we're not always expecting a strong move in one direction. So we set up for the rest of the week. As far as our weekly candles go, we had a bearish week last week, bearish close, but it's all inside of the consolidation from mid-March. So this is a pretty small wick to be on a weekly candle, but anything can happen. So we're looking to extend that. If we are going to remain bearish, pulling back down into this daily order block would be an idea for macro. So we're trying to keep all this in mind, considering it's a Monday, and Monday is the first day of the week, so we're putting in price action that could get reversed against in the end of the week, right? So a bit of a note about vector candles. If anyone's not seen these before, these colored candles on my screen, green and blue indicate an up candle, and red and pink indicate a down candle. Green and red candles are 200% volume. The last amount of, I believe it's set for 10 on mine right now, but essentially it's a large amount of volume over the last average of candles, and you typically see at least 50% of the vectors being retraced. It's not always right away. But as you can see, this it's a very small time frame, but this 1 minute candle, which is inside of that 5 minute idea we were talking about, we can see this recaptured. So as you see, we're driving down there now. So that's another confluence on why I wasn't rushing into the 5 minute Model 1. Just trying to make sure that all the liquidity is pulled before we get into positions. This candle has been essentially balanced. There's no reason we can't come down to the bottom and balance it, but sometimes you'll see reactions off the 50%. So we've now balanced that. We could see a push up for the last few minutes here going into our new candle. But being so close to 6:30, it's a new 30-minute candle starting. I wouldn't want to get into a position right this exact second. So we did get our initial 30-minute reaction off of this fixed value area low, and this fixed was pulled from this whole range that we've got going on here. another concept idea that could be looked at. So the hard time frame is our 4-hour candles. So we have our previous day value area high, PDVAH here. You can see that 4-hour candles flipped that, and then we respected it with our wick, and then we had a flip, and then we're potentially we've put in the lower wick of the 4-hour candle, and we're expanding up. So essentially, I'm not going to take this as a raw idea, but it still builds into the idea that if we were to get a 4-hour move now past this line, that's past our open, and we could see the continuation. So you could look to have a position from here, stops below the 4-hour swing low, and then targeting higher. I don't like this idea as a raw because you very easily could see a reaction off of one of these levels, and it's too small of a risk to reward for me to look at. So that's why I'm looking on the lower time frames. But the idea for the model stands true. And if we are coming up to sweep this liquidity, then that would be looking at a little bit better of a risk to reward, keeping in mind that this PM level, we usually see the PM levels deviated. We set in the 2 o'clock candle and we pushed down, and we never came back to that on Thursday. So the Thursday highs that we're talking about being taken, we can get liquidity pull just by touching on that PM session. So there's a lot of different spots here that we could see rejection from. So just another idea. I like to try and stack these concept ideas on multiple time frames from multiple different places, and then that's what gives me confirmation to go on such a low time frame. As long as we're in line with all of that, and we're looking at things like momentum, divergences, then it gives us additional confluence that that idea is going to go true, and that's why we can take such a tight entry. Does anybody have any questions or anything they want to talk about or go over? Go ahead and throw some questions in if you do. Not particularly. Well, there's not a specific session that I'm looking for in here, so being as that we're past the 6 o'clock hour and we're opening on the 4-hour idea, I'm not sure if you were here during my explanation, but we're watching this 4-hour candle form. We've put in, so the blue line is the opening of the 4-hour candle. We've put in a low, we've mapped a lower time frame consolidation in this yellow box. We've seen a manipulation down, and we're got a slight expansion up. So before we take these highs, the original expansion is still in play. So I outlined a potential 5-minute Model 1 entry, but based on lower time frames, it's not what I wanted to see. So I didn't get an entry here, and I'm willing to take an entry if I see us form. We're now putting in a lower wick of this 30-minute candle, and if we were to come down and what was it, the 15-minute, I believe, this fixed value area low. We've got 2 wicks on here, so we could be putting in a wick here. So the idea of coming up past here would be another valid model entry 1. So I'm looking to potentially get in here. So to short answer your question, no, I'm not waiting for New York. I'm actively looking to trade. But keeping in mind that we're in a Monday. Mondays are usually consolidation, so even though I'm being aggressive with my entries, I'm capping my expectations. We still have our Sunday open up here, which we haven't come back to touch. So it could be that this is just a consolidation and we come back up, take all this buy side, and then move down during New York or something. So yeah, hopefully that answers your question. If not, let me know. I'll try to add more detail. See, we're starting to get micro time frame divergences as we come drive down here. We still have this kind of imbalance that, not that we're taking an entry off this imbalance right now. Yeah, that idea was invalidated, but if you remember me saying as we made this drive down here on a slightly larger time frame, let's take a look so it's not confusing. We had this potential model entry 1. This is the low of this drive down. As we took this swing high, we would have generated liquidity. Anybody who's kind of long this move coming in after 6:15. So we have a small amount of internal liquidity sitting here. Purging that would be a little more ideal. I don't really want to take a position with that we made another aggressive move down here in the next couple minutes, we could see 1 minute divergence, sweeping that liquidity. And if we continue to get divergences on our micro time frames, then I would look to take change of character entry potentially. So this isn't an entry, but for an explanation, I'd be looking to create a divergence like we did here, change of structure, pull my range, and I would look for an imbalance like this one. It sits below 50%, so I didn't get the other confirmations for this to have been an entry, but this would have been a trigger essentially, with my stops below here, and then I always account for a $2 spread. So the position would look like something like this, but we didn't want to take this because this liquidity sweep coming down and sweeping that would potentially stop us out, even though the idea would still be valid. So we want to try not to be aggressive with our entries, even though my model does account for taking multiple stabs at it. I would really want to see this liquidity swept, but that's a perfect world. We don't always get the perfect world, and we're okay with that, because sometimes you're not going to get into the entries you want, and patience is key. Also keeping in mind we're about to open a new 15-minute candle, and this is going to go into the hourly close, where 7 a.m. we're going to start to see a little bit more volume. Typically between 6 and 8 you get consolidation or liquidity pull before we get some kind of move at 8 or 8:30. So we're trying to keep an eye on all of that, and keeping an eye on what we could be setting up for New York. That is an incredible compliment. Thank you very much. Although if ICT saw what I was doing, his blood would boil because I have indicators. Oh. Yeah, if ICT did see me though, he'd be pretty pissed off since I'm using indicators, but I like the idea of having additional confluences. So something worthy of note, because we're looking at liquidity levels below us to be swept, and we have a couple of reasons why we believe that we can come down lower. Another stab at Asia, liquidity push, all that different stuff. I had marked out this consolidation and indicated this red box. This is a potential manipulation, making the 5-minute idea we spoke about valid. Not valid enough for me to enter, but it is a valid idea. It is possible, because we haven't deviated these highs, putting in an expansion, that this is just a this is a continuation of the consolidation that's happening here. So essentially, we're still consolidating. We could still see these lows deviated with a larger manipulation, because this wasn't much for the manipulation. So just keeping in mind of that. If we do see an expansion up, though, this would have been a valid manipulation, and the only entry that you could have had would have been that 5-minute, as we changed there. So looking back on it in hindsight, it seems like it would have been a good idea to get in on that, but I just didn't get my confirmations the way that I wanted to have them. I did make a mistake in my entries. As I said before, I missed this. Whenever you see me put an entry with a blue stop, that's indicating an idea that I'm drawing out, mapping for forward testing purposes, but I haven't taken it. Positions that I take are going to have purple, or whatever this color is. So just an FYI, I had taken a position, small position here, trying to get an add-in on the original idea that I got stopped out on. But that's it for so far. Is there any other questions? Is there anybody looking at any different assets? I only typically trade Nas, but I'd be interested to hear what other people are looking at, especially if it's an LTA concept idea. Also, for what it's worth, we're getting close to 7 o'clock. I have small children, so at whatever point they decide they're waking up, I'll have to end my session. Morning, Chris. I guess we'll do a quick little review. I could have to drop off here soon a little bit, but since Chris is due for the morning, let's talk about what we've been looking at, review for everybody else. So we have a position here that I didn't get a chance to get into. Anytime I have a blue stop loss, it's a forward test idea. Looking forward to break London high and see if we get a reaction off of Sunday open would be the idea if you had got into this. I had got into a scalp. Pull it up here. We tried to get into continuation here and got stopped out. We've mapped a consolidation that we could have had. We've now broke the high, which is making this a valid expansion. We talked about a potential 5-minute idea that formed in here, which as you can see now would have looked really good in hindsight, but it didn't meet my minimum entry criteria. So for myself, I stayed out. We have liquidity that's holding down here. We've now filled this 15-minute fair value gap. So all those notes aside, looking at what we have on a slightly higher time frame, we've got, I believe it was a 30-minute. We got reaction off our previous week POC and our previous day value area high, and that's what we were looking at to get entries into. So the original entry that I did not get into, here, would have been just before that formed. That's why this idea would have been valid for me, but I wasn't at the charge and fully ready by the time it hit where my entry would have been. So definitely a couple small opportunities for scalps, but you'd have to be looking at a pretty low time frames this morning. Typically we get consolidations on Mondays, and that's what we're getting right here now. So we've had few days of inside consolidation, which means we could have a bigger move coming soon. Friday's NFP barely pierced the lows made in Asia here, keeping the lows of previous day intact. We have relative equal low liquidity down here, and it's all sitting right above a 4-hour swing value area low. Taking a look at how that was drawn. This blue is my market structure, so we have a 4-hour market structure low. We've made a new high, and we came down inside the golden pocket of the dealing range. And it's also a daily order block, but we never did get that swing tap. So 4-hour swing was, oh, I apologize, I think I might have taken it off, but it was, I must have taken it off. Either way, we didn't get a reaction off of that, so it would have been from here to here. I guess we can just redraw it. You can see right here we had a value area low that I was watching when we dumped on Thursday to touch, and we didn't. So we've got equal lows there, so I'm still thinking about the possibility of coming down, deviating and potentially respecting that, which would also hold on our daily order block. We have another order block down here with imbalances on lower time frames that didn't get touched, so it's very possible we come down and see that. This is a longer macro consolidation that's happening here, so all of that happening would line up with us manipulating that consolidation to get an expansion to continue the weekly and daily trend that we've been having. So we're essentially looking for ways to get in smart areas to continue and ride that higher. We have this 4-hour trend line that's been holding liquidity at the top, so I'm expecting that to be deviated and the liquidity pulled at some point. So coming up, sweeping Asia highs, whether it's today or tomorrow, and coming down and taking those lows would set us up for later on in the week expanding past here. The way that candle creation works is the body is usually the largest portion of the expansion. We've had a few indecision candles, but if we were to see us reach down early in the week, pull the liquidities that we spoke about, and then close up higher, it would continue this momentum that we've had. But like anything, good things come to an end, so it could be that we're entering some kind of a retracement period here to fill some of these lower areas. And if that's the case, then purging that high would make sense. Taking the lows once, left liquidity there, pulled the liquidity once, and now we've moved down, so we're essentially sitting in the middle of this dealing range that's happened here. So from a macro down to today, we've been trying to scalp this internal range, and we took a fixed volume profile from this consolidation that's happened here. We took it, I believe it was from here, so I'll just pull that out. Wrong one. We marked out our fixed value area low on top of the other levels that we had had. And then that's where we seem to have got our reaction from so far this morning. As you can see, we had a series of candles. Oh, I apologize, that was the previous day. Here, we had our two candles respect that fixed value area low. And we spoke about before about a potential Model 1 entry. So we had one wick respecting the fixed value area low. We had, this is all coming out from the idea that we respected the previous value area high, or yes, previous day value area high here. We flipped above it, respected it, so the continuation of that larger time frame move. We're looking at more micro structure to try and get into a move that we potentially missed off of this. And we had two wicks. The second wick was a candle flip, and then as we put in the tail for this, could have looked at a 5-minute position. It didn't meet my minimum entry criteria because I like to drill down further than that. But if you're just taking it off the 5-minute, you could have. Although Lorenzo usually advises to take it off 15-minute or 30-minute or higher, since model entry 1 is meant for larger time frames. So, haven't practiced too much on the other models, but you could have looked at something like 5-minute. I mean, essentially you had a swing high broke here, so you could have had an entry here, stops below there. But based on it being a Monday, and so a model based on being a Monday, we could see a reaction here. There's not a lot of upward potential. It's not saying it can't go higher than that, but it's possible we just stay inside this range. So taking an entry like this could have still been valid. It's just not something that I typically look at. But it would meet other criteria, like we had consolidation. We manipulated below the consolidation. We respected this fixed value area low on multiple time frames, and then we had our expansion up. So that expansion up could have triggered us as we broke that swing high. But it's all hindsight for studying. This position here this morning that I missed when I was drawing my markups. Usually I get in earlier, but I didn't get a chance to. It was a late night last night. Kids. So we had, just trying to remember and recap. We had our previous day value area high, which if you all remember, we take, pull it up so everyone can see. Friday previous day range. Oh, it's so hard with all this other stuff on So from Thursdays close and open to Fridays close, we take a fixed range profile, and we have the value area high here, which we've outlined with my previous day value area high line. You can see that we put in the consolidation last night after our daily open. We had a Asia consolidation and we pushed down. Pushed down here, taking the Asia low, pulling some liquidity off. As we did that, we respected that previous day value area high. So we had relative close width, and then we gapped down and moved above, but on the 30-minute time frame, on the 1 hour time frame. So we respected it on the 1 hour time frame. So this could have been a continuation onto that, but the reason I took the idea, or drew out the idea, was we had, I like to layer momentum oscillators on top to give me tighter confirmations based on the LTA concept ideas. And we had this aggressive push down. We had vector candles, which is showing volume that can be retraced on, which we can see in hindsight we've done. We've now recaptured those full candles. As we dropped down here, then we got a reaction up and came back down. You can see on a lower time frame we respected this previous day value area high, which was setting us up for the first and second wick here. So before the idea fully formed, we were looking on a lower time frame to see how we can hunt an entry. On the oscillators we have a bullish divergence from here to here. So price made a lower low, we made a higher high, and then we had a hidden bullish divergence, so price made a higher high, but the momentum made a lower low. So this was happening as we were respecting that level and as we purged liquidity, so we're starting to stack confluences. And then looking on, so the way I do it is once I get those confluences and the idea structure building, I drop down. At that point it's safe to do so, well, relatively safe. So we had, this was the 5 minute that respected it with its wicks, and we had to move up, and as we retraced out of that, we had, I don't think we got it on this time, did we? Okay, so we didn't get a divergence here. I would have liked to have seen a divergence here. But either momentum dipped down lower than the previous wave, or price dipped down and the momentum wave stay where it is. But anyways, we got, we're continuing, we had money flow coming up, we had bottomed out on some of our other oscillators, and we had enough higher time frame confluence that I think I took a look down lower. I believe this is why I missed it, because when I was first looking I didn't see the 1 minute divergence, so I kept going with my markups. So we could have said, okay, yeah, right here. So between this low and this low, we made lower lows on our momentum oscillator, showing a hidden divergence. And then locally, we also had a divergence. So between this low and this low, we did a small consolidation, and we pumped and pushed down with the vector candle, showing lots of volume, trying to break out those lows. But we had bullish divergence. So as we did that, I could have looked at a change in character, which happened here. I believe I have this drawn in my drawings, so I'm going to keep deleting them as we go, but as we had a break in market structure there, I would have started to pull, would have started to pull a dealing range, looking for something in discount to get an entry with. And see that we had, where was it? We really didn't get it, so in hindsight, I wouldn't have taken this even if I was sitting here at the moment, but not getting that 1 minute divergence would have kept me out at the beginning, but I have to try and go back to my notes from this morning and figure out why it is that I marked it out originally, but I would have liked to have seen a imbalance. So we did have a fair value gap here that you could look to enter from. We had this imbalance, which I guess you could have called a retest here as an entry. The way that this is sitting right now, I would not have taken that. Like, my entry point would not have been there. I think I marked the idea out and then I walked away from it. I was looking at other things, but yeah, so this might not have been an entry right there anyways, to be honest, for me. But it doesn't mean you couldn't have entered off of the LTA Concepts. Capturing that vector candle. I'm gonna edit my label here once I find. How did I refine it? I can't remember now. That's what it was. Okay, got ahead of myself here. Okay, so I was looking at, even though I didn't have the divergence that I wanted to see, I had this vector candle push up that I anticipated to see retrace to 50%. So, again, I didn't take this because it was all hindsight after the fact, but we had a series of lower lows made here, and you can see we put in a low on our momentum. The second low was a bullish divergence, and the third low, even though it made a lower low than this momentum, it was a longer term divergence here. So as we broke, this needs to be moved over, as we broke structure here, we start to pull a range. We had this imbalance down here underneath 50%, so that's why. Because I had two. Now that I'm doing it, I remember 5-second dealing ranges. Yeah, there they are. So the way that I usually pull this, as long as all my valids are as long as my entry is still valid, if I see a break lower here and then move higher, sometimes I take the second range to take entries off of, which would make a valid entry up here. I stayed with my original thesis because the way the momentum was looking, and we had the idea on the higher time frames to come down to respect. Back and forth, we should just replay it. Yeah, so since I was looking at this previous day value area high as being flipped, when that lower structure broke and made another high, I didn't want to see the imbalance in there. I wanted to see it further up. So when we came back down, I keep saying I wanted to, but this was hindsight. This is our first gap, our first volume right here, volume imbalance here. So that's where my entry would have been positioned. Could have also taken this one, because I just explained why I didn't realign this, pull off this, so I would have pulled it up higher. So the first untested imbalance is sitting right in here, and that's why that entry would have been placed there. But because it didn't follow my A plus setup to a T, this would have been more like a B setup. It took me a little bit longer to see it, and we were already moving away from it at that point. So that's why we started working on all these other concepts. So hopefully all that rambling makes a bit of sense. If not, feel free to ask questions. I have no problem trying to re-outline it again. It took me a little bit to remember exactly what it was I was looking at, because I didn't see that original divergence here. For the time being, due to my personal lifetime restrictions. I don't want to try to get into a position and not be able to manage it. My children wake up, so I may or may not get the opportunity to trade New York. The way that I usually work my trades is I wait for 9:30 open, 8:30 open, 9:30 open to both give us some kind of a move, and then I redraw my liquidity pulls, and then I look to see what we're expecting going into the 10 o'clock hour, and then I would look to try to trade a wick on the 10 o'clock candle, getting in with the same methods and the same ideas. So depending on, at 10 o'clock we got two different candle changes that are significant. We have the 1 hour obviously starting at 10 o'clock, and then we have a 4 hour starting at 10 o'clock as well. So this 4 hour here, I'm going to try and get rid of some of this because it's so messy now. My brain. Recently. Yes, the higher term time frames divergences definitely hold a lot more accurately. I'm not sure what you use for momentum oscillators for your divergences. I've got markets FB here, which is obviously not necessarily something everyone's going to be using, but essentially it's showing you the same thing. So just to recap for anybody who doesn't know, the lines up here are RSIs. So the teal line is your regular RSI, and the one that changes from purple to blue is your stochastic RSI. seeing them together shows more strength in whatever divergences moves you're seeing. Then you have a momentum oscillator. I'm not exactly sure what they base it off of, but I typically look at the regular RSI. Okay, yeah, nothing wrong with that. It's hard for me to speak exactly to the regular RSI because I don't always use the RSI divergences. I'm typically looking at the momentum oscillator here with the waves. But at least with Market Cipher, you can see that when we have, let's see if I can find an instance of it. Not necessarily on this time frame. It's hard to find it on this time frame, but typically you'll see multiple divergences happening as money flows like thick on one side, either the top or the bottom, and that can indicate that you'll get more divergences to the upside before you're going to get your move. So that's what helps me filter out my lower time frames. So I like to use the divergences and then just stack confluences on it like crazy. So I don't want to take a divergence on a momentum divergence on any time frame essentially without having a higher time frame concept. So I enjoy using the LTA concepts to layer on top of that, because if we're getting a reaction like divergences stacked at a POC or value area high or low, and then I can also build it on a higher time frame to say, okay, you know, a liquidity swipe or something, and then pair that with a session liquidity sweep. So we got a 4-hour sweep, and then we're also sweeping multiple sessions here, and then we're coming down into a order block on the daily. Those are a bunch of confluences that stack. So when you get down here and start to see, this isn't a really great one. So like divergences here, right? This still is getting closer to what the divergences that you would look at with the 4-hour, but we had a pretty significant divergence on the 1-hour, like a low here. We had a lower low. That was happening into the swing low. So as we were dumping out on Thursday, we were in a 4-hour leg. So we had market structure break here. The blue line's indicating my 4-hour structure that I had drawn out. So we had a structure leg moved higher, or broke higher. So pulling range from here to here. These 3 lines right here is our golden pocket. You can see we've got a golden pocket there. We are in a discount of the dealing range. We're in a daily order block. All that aside, we had a daily support resistance flip. So I'm just stacking confluence on confluence on confluence. And then once you get to the point of before you make that higher, because essentially like when you're looking at your 4-hour divergence, by the time that 4-hour divergence prints, you would have had a series of 15-minute divergences, and then before the last 15-minute divergence, you would have had a series of 5 or 1-minute divergences. So it's true, you can't just like look on the 1 minute and say, hey, here's a divergence, I'm gonna long here. It only works sometimes in hindsight. But when you really start to stack the idea of like, hey, we're about to print a 4-hour divergence on momentum. Okay, well, let's dive in and see what we see. Well, if you're printing a 4-hour divergence on momentum, that means you've taken a swing low. Let's see if I can find one to walk through. Okay, so we had one here. Maybe we can give an example here. So you can see, I know this isn't art. Well, actually, he did have an art. Not really. Questionable. It'd be hard. I wonder if I can pull up. You said it was a regular RSI, right? I got a divergence on my momentum oscillator, but not for your RSI. So I want to try and see if I can get an example of that to show you how you can refine it. Since the 21st of this on NASDAQ, I'm assuming? Just because that's what we're looking at, or? Yes. Okay, let's try and take a look at what you saw. And by the way, I'm not no all-seeing God, so if I agree or disagree with what you say, don't let that dictate too much, but I would like to see for sure. So, February. Where are we here? The 21st of February. Oh, yeah, so this is what we were looking at in here. So were you looking at this drop down here as a divergence? Yes. Okay. Ah, I see what you're saying. So you're seeing this low and this low as being a divergence? So, yeah, that would have been totally valid, I suppose. And then let's take a look. So okay, this is cool. So you actually have an entry from when we were talking about. So, let's try to use your indicator to see if we can. I'll be honest, I don't use this, so we'll see how this goes. So you had a great idea there because we had a leg up. We were in the discount of this leg, here to here, obviously, right? So all that's great. So how can we refine this down? So let's take a replay tool over to here. Let's drop down on our 1 hour. So you can see right off the bat, you can see we had a divergence more locally. So on the 4 hour, we didn't get a divergence here, right, between these 2 points. But when you drop down to your 1 hour, as we made that low, again, I don't know exactly what time your entry was on this day, but as you made that low, we took out the liquidity from the previous day. It'd be pretty cool if we could stack some LTA concepts, because I haven't looked back this far. So let's see if we can do that too. So swing from here to here. Oh, maybe a fixed from back here. Ooh, look at that. Look at that, everybody. So if you take a fixed from the range that happened back here, you have a point of control and a value area low happening right as we reach down there on that day. So there's your LTA concepts stacking. Now, what did we do as far as liquidity wise? Well, we took out that low, right? So I know right now I'm just validating your entry, but I'm explaining why I would be able to refine it to a lower level. So you took out liquidity there on a higher time frame. That's the daily liquidity. We put in a 1 hour divergence. So let's go a little bit lower and see if we can find something. So when you start to come lower, you're not looking back here. Your 1 hour divergence is explaining this drop. You've already explained it liquidity sweep wise. You've already explained that you've got, let's mark these out too. Oh, come on, fixed range. Why is it doing this? I'm not going to bother labeling them, but we have POC on top and value area. Why would we not just throw POC? Okay. So diving back down onto our 15s. You can see we came down and got a reaction right off those volume levels, right? You might not get it on every time frame either. That's why it's good to look on multiple. But as you can see, we made lows here. We came back up. Then we came down and made another low. Well, these two lows are not lower than each other, right? Well, we have another divergence, right? Now we're refining it even more to our 15. So as we didn't get a divergence on this drop. Actually, we did. But the way that you're screening this out is your higher time frame wasn't printing the divergence until that point, until we started breaking up here. So you're looking on your higher, you're seeing as we make this sweep below this low, right? You're starting to make the divergence. So here you start to see divergences on this low, and you see them again on this low. So let's go a little bit lower. But again, stacking the LTA concepts, like you would have wanted to see these lines touched, right? So this divergence that happened here wouldn't have been valid yet because we still hadn't touched it. So now that we've touched it, we're getting a reaction off of it, and we're getting a reaction with that divergence between these 2 points. 33 profits, 2 TPs. Okay, good. Sounds good. Looks like you did a good position. I'm not sure where. Out of curiosity, where was your stops for this position? Did you have a stop loss? Not that I'm trying to pick yours apart. I'm just looking at other people's concepts. But either way, we can look at. We had the 15-minute divergence as we came down and took the liquidity off of those lines. And then we had. So, as far as daily session goes, we had consolidation in the morning. We left liquidity on the top. We had equal highs here. We had relative equal highs here. We didn't take out. Well, we did take the Asia high, but only just barely, and then we trickled down all the way through New York. So 9:30 open. Pulled a bit of buy side liquidity, and then we kept trend lining down. What I mean by trend lining down is we have a trend line that's roughly respected, so you got liquidity above there. As we can see in hindsight, we've purged that, right? But this is all building confluence on your lower time frame, so your higher time frames started getting you to look here, and then when you look on the lower time frames, you can see that liquidity building. Yeah, but I mean, originally, where would your stop have been? I'm just curious, because like the reason that I like to take that divergence is all the way down to lower time frames is you can refine that entry and get a much larger win risk to reward. Like I would have to, well, I don't want to assume, but I mean, like, did you have a stop below this low kind of thing, or how did you base your risk for the position? And don't feel like I'm calling you out here. It's totally okay if you don't know or if you didn't have it. I'm just curious what you did. In hindsight, you obviously made money. That's great. Like I would have, if I'm potentially taking that as a divergence, then I would have looked for, like, I guess the swing low. The swing low would have been sitting there. So my position would have been something before refining. Would have looked something like that, I guess. Maybe targeting the highs or wherever your original targets were. I feel bad. I don't mean to put you on the spot, by the way, either. It's just, it's very helpful for others who might not know. It's helpful for me to see what other people are looking at. But it's definitely important in my eyes to always have some sort of risk management. So have a point of invalidation where things could go wrong. It could be that you looked for a structure change, or did you just enter right off of the 4-hour divergence? You have what's your other entry criteria? So the structure change here, 4-hour. So we had a structure change here. You could have said they'll stop below the lows, right? I guess that should have been my next question: is where exactly did you enter? Okay, well, it all depends on what your model would dictate. So it's important for you to build a model so that you can be repetitive with it, so you can backtest and understand your information. So I like to try to have an outlined model, and it is what it is if I don't get the entry. But if you were looking to enter off a divergence, stacking all these ideas and diving down, you could have taken a swing low stop loss. If you wait for the structure break on the upside, so we had, I guess, a small structure break here, but realistically this would have been a structure break. So as we broke above there, could have taken the entry on the 4-hour divergence, so it would look like something like this. You could have said stops below here. To be honest, I have no idea. I just pulled this out. Yeah, good. 14. yeah, so there's just a bunch of different like models that you could have added there. Like at the end of the day, it's all about what you can see as a repeatable thing. So you either want to take like whatever your time frame you're looking at on structure break, or stop below low as it's forming, and then you take a lower. Like I like to dive down, right? So I don't just take here's my 4-hour divergence, and I'm not saying you do either. I'm just giving an explanation. But the reason I'm asking you all this is because I want to be able to refine the stop, give explanation. Because even if we were just targeting previous daily highs, so in this case we were very obviously making uptrend, or making higher highs, sorry. So targeting that previous high wouldn't have been out of context, and you can see from my drawings here, obviously we did that, right? Well, if that was going to be your original target, first of all, I always like to look at targets that are between the swing high that was made and the swing low that was made between the entry. So 50% would be here. So any liquidity hunts up in this area, it's a golden pocket, there's a imbalance there, volume, fair value gap here, there's a consolidation that happened here, so dipping above any of these highs could be a liquidity pull, sending us back down for another divergence. So it's always good to take I'm not saying you didn't, you might have, but I'm just saying for everyone else, to take a profit in there, but your ultimate target would have been to make new highs, taking a TP2, moving to a stop loss to break even, which you can see in hindsight you could have held for the next few days. So that all being said, to refine that entry, you could look at your 1 hour. We talked about the divergences that could happen there. I'm just going to dive right down to doing the whole thing again, but let's say we took it off of the divergence, because waiting for your 4-hour structure break would have happened way up there. But when the divergence was forming down here, as we were making that low, it wasn't lower than this low yet. We could have started to dive down and said, okay, that low is also confirmed divergence. We had a divergence forming here, but it wouldn't have been confirmed until we made this break higher above this trend line. Going down lower than that, we could have said this 15-minute divergence. So we're trying to figure out how we can get it below this point. Here's 1 hour. So at this point we could have taken it there. Oh, that's right. Also assuming that we were taking some kind of swing low. We take it from the break. No. Okay. So we take it from the break, we're refining the entry period on how tight you can get the break. If you were taking that divergence and then putting your stop below previous swing, then you'd be refining your stop level. So either way, you're making that risk to reward tighter. So coming down on a 15-minute, you had the divergence between here and here. Just get rid of my thing here for a second. Oh gosh, that's not what I wanted to do. Oh cool, okay, let's see what you got. Okay, so yeah, so that's cool. So you took the 4-hour. Thank you for sharing examples, man. I really appreciate it. Hopefully it's helpful and for other people too, to hear the hindsight. So I see your divergence happen there. I see yours is slightly different than mine. So you actually had a 4-hour divergence there. Profits in the red lines. Good, man. That was a really good position. Looks like you did good with it. I definitely wasn't trying to correct your methods or anything. I just wanted to. You made a mention how everything moves a little bit slower on the 4-hour. So I can understand 100,000% why you would want to take it on the 4-hour, depending on your lifestyle and stuff. But just for conversation's sake, let me check this. You put your 4-hour low. So you put it below the low here a little bit. And then you took the entry as the 4-hour candle closed higher. So your entry would have been something like that, okay? For the sake of looking at lower divergences, yes, okay. So for the sake of looking at lower divergences, to try and get this entry earlier before we had to do the 4-hour confirmation, is essentially you want to like front run the divergence, right, to get a tighter entry, if you can, obviously. But down on the 15-minute, we had the divergence here. That confirmation break would have happened here, so you could have went down to that point at this point, right? the reason I believe you could have done that is because you're not just basing it off of a 4-hour divergence potentially printing. You're basing it off of, we've touched these volume levels, we've breached the previous daily low, which is liquidity. We are in a larger uptrend, so all those confirmations are allowing you to look on a lower time frame. And then as you dive down deeper and deeper and deeper, you're not taking every 15-minute divergence up here. You're taking ones that have happened after we purged this. So this divergence happened after we purged that, and then diving down even deeper than that, as we broke down. So we had a consolidation here. We broke down those volume levels we talked about being touched. Might have one here to look at. So down a little lower. So it could be that with your lifestyle or whatever, if you're just setting alerts and stuff, that 15-minute closure could have been an entry. Just could have given a slightly better risk reward, right? But what time is this too? Okay, interesting. So this is also 1400 hours. This is 2 o'clock. 2 o'clock is always a liquidity purge too. Yes, that's what yeah, for sure. It just takes a bunch of refining, right? It's definitely, don't get me wrong, I trade them all the time, so it's very easy to get caught up in trying to rush into your position because you're seeing divergences happen up here. Like as we made a lower low here, you can see lower time frame made a divergence, but it obviously wasn't the low yet. But yeah, just stacking on top of those other confluences like LTA Concepts. And then actually something interesting to look at here, since we're talking LTA Concepts, is what we should be practicing. A little bit below that, so it's not really a clean model entry, but depending on what you allowed for allowances, if you were making your first stab at it, you could have said actually, do we have a wick there? No, we don't. Either way, it would have been better to have a candle flip here. We didn't get a candle flip, it closed below, so it would have invalidated some of them, but closure back above the high could have been a very aggressive, higher risk entry as far as LTA Concepts goes. But to refine that even more, we can start to look at ranges and stuff. Broke that here. Didn't flip it till up there. We had a swing from here to here. There. Let's try and go even tighter. We had a fixed. We had a swing. Oh, that wouldn't have been clean. This would have been a fix too, as we made the divergences. Bring that over far enough. Yeah, it would have been hard to refine that there, but definitely the 15-minute could have got you just a little bit tighter in that, the confirmations, but the trying to stay off of going down to micro time frames, because I know a lot of people don't do that, but that's how I would have done it at least. I would have looked at that divergence, and then as we peaked down here, started to hunt through this area, and then again I scalped, so I would have had to have been sitting looking at the 2 o'clock session, but this would have been valid because this red line here is 2 p.m. starting, and typically 2 p.m. sweeps a piece of liquidity and either makes a pivot or does a continuation. So in this case, we had trickled down, taking the daily lows. We had that trend line building up there, and we made a tight little consolidation here. Oops. Oh my goodness, why isn't this drawing? Oh my gosh. We did consolidation. We broke the low of the consolidation right after 2 p.m. 2 o'clock opened here and moved up, so we had no wick on the lower part of that candle yet. We pushed down below the low. We deviated below this consolidation, so there's your manipulation. So hunting for the expansion, looking at the 4-hour time frame, seeing that divergence starting to form, wanting to get in. If we get that 4-hour confirmation, we could start to say, okay, how can we refine that even further? Let's see, did we get one? Personally, why I like the market cipher, because it's giving you multiple, like on my market cipher, you can see I had divergences, right? I'm trying to make it for the RSI, but the one momentum oscillator does limit it a little bit, because if you don't get a divergence here, you're essentially don't have anything. But you can see I had a momentum divergence as we dropped down there, so you could have taken a structure break here as an entry essentially, with a stop below low as a first potential, but oh, we actually did get like a tiny one. So you can see we started to come up. We made a low as we made equal lows. So there's a small divergence. And then we came up above this swing high. So, I mean, I know it seems insane, but we stacked all those concepts on top of each other, right? So once we got this closure above, you could even wait for validation, like we consolidated here and moved up again. So it's really starting to show momentum leaving that area. But you're getting much, we're still targeting the previous day high, right? Now you're talking about like that's a much higher risk to reward ratio, right? That gives you a lot more to play with. You could, you know, not you could have, I'm not trying to say you did something wrong. You did very well. Anyways, again, not trying to correct you, just trying to use your example to maybe educate some other people. I don't know where everyone else is in their journey, but it also helps me to practice to look at these kind of things. But, so, 2 o'clock session. Could have seen a play like that. Obviously, it's easy to see in hindsight because you're hunting for the right things, but practicing in hindsight is what's going to allow you to see it in real time. Thank you for sharing your example. I really appreciate that. That's a good exercise to go through for me at the very minimum, if nobody else liked it. But definitely holds true again and again. These LTA concepts are insane though. I highly suggest people practicing, even if you don't decide to take the entry models the same way that Lorenzo shows. Stacking whatever your trading confluence is and model is on top of these is just an added confluence. An important way to build a model is to have some sort of indication of momentum, whether it's volume or candles or anything like that. In our sakes, we're using divergences with momentum indicators, and then stacking on top of a volume idea. So here we have a high stack of volume happening, and as we push down through it, then you have liquidity ideas, the fact that we have we actually had taken out a previous weekly low here, right? So we were oversold in that aspect. Even if we weren't going to continue this uptrend, retracing back up to 50% to grab internal liquidity would have been a valid idea. So definitely taking longs out of here would have been smart. And then looking at things like the day of the week. So we had Monday put in. We never really came up into this area. So when you think about a daily candle being formed, let's do 4 hour for a second. When you think about the way that Thomas talks about his candle creation, oops, you have like your daily open, and then if it's going to be an up candle, like an up close candle in an uptrend, you're typically going to see some kind of move down to create a lower wick, and then an expansion higher, and then a close. The close is usually a little bit lower, creating that upper wick. So that's your candle formation here with your wicks. Really shitty drawing, but you get the concept. So with that candle creation idea, when you're hunting for longs in an uptrend with a daily confirmation of trend direction, you want to be taking your longs, stacking all your confluential ideas in that wick, or at least the way that ICT shows it is that it's going to be within one standard deviation of that, or half a standard deviation. So your longs should be somewhere in here, essentially, whatever that details here. So that concept being said, looking on the 1 hour time frame, back at our example here that we were having, it's interesting because we had, this is Monday right here, we had Monday open up here. So we had Monday open up and we put in basically nothing for a wick, right? Because we would have been opening, well, it depends on where you take your open. These lines are midnight. So if you take your opening from midnight, we had like almost no wick, and we moved down. So in my mind, we're creating a lower wick for the week here. Monday's usually consolidation, which you can see here. Tuesday expanded out of that consolidation. Wednesday gave us additional consolidation, took the sell side, and then you can see we had the expansion upwards, right? So that gave us our weekly candle higher. Where Friday closed out here, so we would have had wick down, body expansion up to our close. So you can see, well, I can see, I don't know, it takes practice, but you can see the candle here. Oh my gosh, floppy. You can see the candle body here with your wick down and then your wick up. So there's your weekly candle, right? So the reason I'm explaining that is you stack volume with liquidity with candle creation, and you get an idea that on this Wednesday after consolidating for the week, it's much higher time frame to expect us to take out the highs of Monday realistically and then continue that uptrend, right? So I'm not very good at holding that long right now because of my personality and mindsets, but when you take that 19 to 1 risk to reward we looked at, that was only targeting the daily high, previous daily high. Oh, whatever, we're getting all sidetracked here now, but yeah, you get what I'm saying. It would have been the previous daily high that you're looking at. So if you then extend that to say, okay, well, we're building a wick, the lower wick on a weekly candle, then you can start to take the previous weekly high as a target point, and that would have exploded that risk to reward. So you could have looked to have held 50% of that day, would have been like an 8R, and then move stops to break even and just let it ride for the rest of the week, closing out somewhere between noon and 3 o'clock on the Friday, expecting that the last push of liquidity is going to be to the opposite of the candle body closure. I'm probably just rambling. I don't know if anyone's actually listening or not, but yeah, thank you very much, Chris, for your example. Appreciate it. I hold many days and weeks. Yeah, you got intestinal fortitude, which I do not have. I'm doing all of these exercises and practices to essentially get to that, but I very much so like to isolate my positions into my sessions. So for example, we're approaching 8 o'clock here. I'm not usually trading by this point. My kids have usually woke up. So I'm usually looking to take multiple take profits, stops move to break even, and I don't always get to sit. If I could sit for the whole day, I would hunt for that perfect position like we were just picking. But I typically try to refine those down to the session, and I don't always get to trade every session. So, oh, no problem. My pleasure. I enjoy doing this, and if I can add any value to anybody, hopefully elevate you all up, then you can help elevate me at a future date. Like, if you've got the intestinal fortitude to hold for weeks, maybe you can give me a psychology break on how to do so. Not for weeks, but days at the minimum. because you dramatically change your trading game at that point, right? In that case, you know, you could have sat out on the Monday because it was a consolidation, no point in getting in. The Tuesday, you might have hunted for a position, and maybe you took a bit of profit and got stopped out as we made the Wednesday low. Yeah, so we gotta learn off each other, my friend. Because that's all I trade is lower time frame. I'm addicted to the lower time frames. That's why you see me going down to like my 5-second time frames. People are like, "You're insane." Oh, price is fractal, so everything's the same. I mean, even looking hindsight to today, trying not to have TA goggles on at everything I've done this morning. This is Monday, right? Like, we're in a consolidation. We shouldn't expect anything crazy. We've already put in a high and we broke down to a low. Oh, this is ugly. We've already put in a high and broke down to a low. It could be that this is our Monday consolidation, right? We can sweep some highs. We got a trend line forming down here. We got equal lows. So there's all kinds of internal liquidity that can be swept today. So it's not saying that we can't see a big move on a Monday, but it's a much lower likely chance that we're going to see a big move on a Monday. With our overall trend, we're expecting a move up. Well, I'm expecting a move up, but looking at like our 4 hour, I usually use my 4 hour as like my trend line or my direction, my bias for direction. So we made a series of swipes here, consolidation. And we took out the lows here and we pushed up. So to me, this retrace, I was looking for this to hold in this daily OB, which for the time being we have. Doesn't mean it's not going to. We've got other levels down here that we could be reaching for. But if we're going to hold with that concept, before we break these lows, you can't expect us to hit these. So if we're working off of this concept, we made a swing low and we took out these highs. So this is our bullish structure, like bullish dealing range right now. We've made a pretty aggressive pullback, but we've done that holding liquidity intact on the upside. So if we had swept that liquidity and then pushed back down, it would make me think that we're coming down here. So then I'm starting to build 4 hour and daily candle creation ideas for the downside. But because we haven't done that yet, this aggressive move Thursday that caught a lot of people off guard, to me this was a nice draw-in, right? Everybody who was trying to long this idea to new highs got stopped out of most of their positions. So now that with that all in hindsight, if what I said is going to come true for the week, then we might be looking at a weekly candle creation that says Sunday, okay, Sunday open. So if you look, here's Sunday open, this orange line, right? We haven't made any move above here yet to create some kind of upward wick. So we talked about the candle creation expansion. If it was going to be, well, I don't want to say that this is for sure because anything can happen in trading, but higher likelihood says that if we started to move above here, at least between now and tomorrow, we could be putting in an upward wick to expand down for a body to see that candle closure lower, right? So something that looked like some kind of weekly candle to look like this, right? So until we get that price action and some kind of divergences and liquidity sweep at the top, that's not what I'm looking for. I'm expecting that we've already done our liquidity pull here. Now it's time to generate more liquidity to swipe before moving to the upside and taking this liquidity and expanding for the week, giving us new highs all around. So seeing this as being a Monday and we haven't swept the highs here, I see us that we're starting to make some kind of lower wick. So maybe this is the wick and we move up. Maybe we consolidate for the rest of today and then tomorrow move down, sweeping today's lows and maybe sweeping last week's lows, which would be back into that idea that we spoke about before with your Wednesday idea. So between Tuesday and Wednesday, seeing a move down, taking liquidity here or lower, and then getting an expansion up past this weekly candle open, and then we could see, you know, something like that, even if we were to deviate back into the range. So if we take out all these highs and then come back in here somewhere, maybe, you know, price likes to hit 50%. So again, this is just rough, so don't take this as a measured move or anything like that, but you know, coming back down into Monday consolidation would be 50% if we were to do all that, right? So this could be an idea for our weekly candle to move down over the next couple of days, or consolidate and sweep, and then have a sharp move down between now and Thursday, and then see a reversal. Maybe Thursday takes out the highs, or maybe it just comes back up and deviates back into a range, and then Friday takes out the highs. But all that being said, there's no reason we have to break out this week either. This could be a longer term consolidation. We could see this could be a couple weeks, right? And if that's the case, then we'll see deviations to the bottom, deviations to the top, deviations to the bottom, deviations to the top. And when that starts happening, then I would start to set up a much larger macro view and say, okay, we're definitely consolidating. Like the moment that we broke lows, we broke highs, and then pulled back into the range, this is already a consolidation. So we're into a weekly consolidation. It's a matter of whether this week is going to put in a push that breaks that consolidation. But essentially, I mean, I guess that's not 100% true. We would have hypothetically been up, down, up, down. Yeah, no, that's kind of where I would put my first consolidation here. So if we're talking about holding this daily OB, but it's in all practicality, if we are going to have an extended up for the next few weeks, it would make me more comfortable to see these lows deviated completely. So to have Monday consolidation, Monday consolidation, deviate these lows, put in a manipulation to this consolidation that's happening, and then expand to the upside. And then from that expansion, you could get a retrace for the continuation that Lorenzo talks about. So in order to see that, we would want to see some kind of wick for the weekly candle, this week, next week, whatever, deviate below this low, creating a manipulation circumstance. Could even come into this OB I've got marked out here. And nothing stops us from going lower, right? Like this has been a pretty aggressive move as far as the higher time frames go. Like there's imbalance down here. So to have a few weeks of downside before we move up is not out of the question either. So at this point, as far as I'm concerned, on a macro time frame, we're quite indecisive. We're definitely bullish market structure, but we're putting in consolidation that we could see manipulated. So watching to see how this consolidation gets manipulated can give indications on where we're going to go for the future. And then thinking about seasonal bias too, like we're coming into summer. Summer is usually a stagnant time period. Where's my map? Oh, come on. I don't open this up. Whatever. So, you know, we're into April now. So we're hitting our quarterly mark. So I guess I can show it candle-wise like this. You start to look at the macro, right? 3 months is our quarterly candle. We just opened it, right? We've been upward for the year so far. We just opened it and we haven't deviated those highs, but that consolidation that we're drawing is right up here, right? So if we do deviate these highs early within the next month, and then we get a break below the lows, it could be that we're going to expand down for a little bit, right? And we're not going to break this market structure until all the way back here. Well, I guess this swing low would be breaking market structure, but it's reasonable to think that we can come back to 50%, as most retraces do. So it starts getting a little bit different when you're on such a higher time frame because you don't see as much oscillation. But, you know, even for the monthly, we've had multiple bullish closing months, right? And now we put in a much smaller candle body, showing some indecisiveness. We've had a gap up into this month. We've moved down, taken out some internal sell side liquidity. So if we see us deviate these highs and then continue down lower, it could be that this is a monthly expansion lower for our first bearish candle, right? Bearish closed candle. I mean, right now we don't even have to move for this to be a bearish closed candle, so it makes sense for us to just move sideways, right? So these are all building into concept ideas, and then you can take it even a step further and say, last year, 2 years ago, we had a huge retrace, and with like COVID and all that other stuff that happened, the markets had a big cool down, and then we did an expansion that a lot of people caught a lot of people off guard. So a lot of people didn't get into positions. So they're seeing this bullish new year, and they're getting into longs. Well, if you listen to ITC concepts, like, you don't want to be getting into longs as we're breaking highs, right? So this could be essentially, I mean, I'm not saying we don't see higher prices, but this could be, we put in a small wick on the lower, we expand up, maybe we close a year higher, maybe we don't, but coming back down and deviating below this seems a little more probable to me now that we've had this range creation. There's nothing saying that this isn't a giant consolidation that we just manipulated with, that we manipulate with this year, where we see lower prices, right? Anything can happen. You can't put it out of context. It'll always be labeled later on as some black swan, but at the end of the day, the concepts all hold true, right? Like, there's no reason we can't look for that stuff like that. But we trade what we see until it breaks. So we're in a longer term uptrend right now. So we're going to keep trying to catch decent longs that are in a discount price that align with a whole bunch of concepts, and trying to hold those for people who have the fortitude. Anyways, I'm probably going to wrap it up and call it here. Let's take a look at what we got for local price action for a few minutes before we go. I've been recording this, and I like to try to make reviews for myself so I can hear what I've thought about. I'll probably try to make some kind of review and record it and put it in the V3 verified overview. So if anybody wants to review later on or wants to replay this session, I'm hopefully going to have it in there. So this was the potential consolidation we talked about. Try to get back on my track here. Whew. Talked a lot there. No problem, Mike. I thank you very much for sitting around and listening to my ramblings this morning. I appreciate that. I'm definitely not an absolute pro yet. I'm working towards my pro journey, I guess you can call it. But sitting here and explaining myself, especially if people are listening and have interest, it's educational for myself too, because I realize and see things, and sometimes we need a reason to not be impulsively looking at every candle creation, because it's not always the best opportunity. Being a Monday, Mondays are always typically consolidation days, so it's not somewhere you want to be trying to jump into positions aggressively. But we can see that we did have a dip down here this morning, so that original long position that I had shown could have opened at 5 o'clock when we had this retrace here. It could be that is the low of the week. It could be that we deviated last Friday. Sorry, Friday's low? No, it wasn't Friday's low, but we deviated the consolidation from here. We put in an A. We moved down from the daily open, so this could be the lower wick for the week, or it could just be lower wick for the day. We could even see these highs taken out today. Who knows? But that being said, participating in as much correct price action as you can is going to increase your chance of catching that longer term trend move. But sometimes keeping yourself distracted by practicing is not a bad idea. Like, as you can see, we consolidated quite heavily here. I took one little stab at it a little bit late this morning, and I got stopped out, and that's okay. Sometimes we lose, can't win all of it, that's for sure. But in hindsight, we were talking during all of this, but I had marked out this liquidity here. And you can see we've come down and grabbed that liquidity. Let's see if there could have been something built off of that. So we had candle flip, move lower, we've been a trigger on a model entry 1 for the hourly, using this previous day value area low. So we started talking as we broke through the top of this consolidation. That would have been valid entry model, valid model 1 entry for LTA Concepts, because we had moved up, we flipped it, we respected it once, and we came down, we wicked. We had a second wick that flipped the candle, and then as we made this tail, I was trying to seek entry, but I didn't get my proper confirmation. This is where you could have had that 5-minute confirmation, which would have been the move, obviously, in hindsight. Well, I shouldn't say in hindsight, we could still come lower, but at the time it would have been good. Take up some profits, move to break even. But as we break the high of this candle close here, that would have been your model entry 1. And then we still have Asia intact up here. We have Sunday open. We have an earlier previous day value area low. So there's targets to reach for up here. Obviously, with the tight consolidation that Monday's seen, this doesn't give us much risk to reward. So you would want to look for something higher, like last week's PM session that didn't get touched, or the previous Sunday open, or this larger trend line liquidity that we've been mapping out here. Those all would give you higher time frame or higher risk to reward ratios, but being a Monday, there's no reason that this can't be a consolidation. We deviate below, so to try and hold it to that, you might not get it. So conservatively, it's reasonable to think that we can come up and touch this week's Sunday open or take Asia highs. So you could almost get a 1-to-1. So for me, that's not worth me getting. I would need to refine it. I would need to stop entry down here. But we can see also setting up a 4-hour idea here. We have a whole bunch of stuff that's being respected. We had multiple wicks. We had a candle flip. We've actually had a move above. So you could even say this is a 4-hour entry idea, right? So this candle would have been opening at 6 a.m., right? So the 6 a.m. candle opened, it dipped down. We were looking for entries we didn't get. And as we broke above that high, which was also the high of the 1-hour candle, we triggered this next idea, which is the 4-hour idea. So we had a wick down into all of this. We had a wick down with a candle flip, bullish, and then we had the lower wick put in. So again, not saying that any of this is coming true. Definitely don't be taking a long now trying to catch this because you need all your other confirmations. But looking at LTA Concepts, it's valid to look for that. So something else that I'm trying to filter into my practice for LTA Concepts is not just taking fixed TPs. Like, it's okay to take fixed TPs, but really we're taking the reaction off of these levels. So I want to see how we react off these other levels. So it's not always applicable, but essentially taking an entry on the 4-hour, you want to see a 4-hour respect one of these levels with some kind of wick before you say, okay, let's look for a closure, let's look to exit the position. Because it could be very well, like we spoke about before, that we 4-hour close up here, 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 and we keep getting a move up for the next couple days that you could hold on to, which would make this position much more valuable. Like the weekly expectation, I shouldn't say expectation because we're consolidating, but the weekly possibility is that we break this high and then put in some kind of higher weekly candle close, right? So that being said, you would have a 5.898 there based on a 4-hour idea if this holds. But being a Monday, it's definitely a little bit lower probability that's going to happen. So I like to refine my entries, so let's try and refine this while we were talking. Let's see if there's something we could have taken. That candle expansion happened here. Here, as we broke up above that consolidation area. So that 4-hour idea would have become valid here. Now, as we dipped down, we talked about the 5-minute idea that's in here, but we also had another pullback here, and we had spoke about the liquidity that was generated. Right there. The liquidity that we had on a lower time frame, we had our manipulation down, expansion up, and then we left this liquidity with this retrace. That's why I didn't get in. What we we came down and deviated that here. So, and we deviated that going into the 8 o'clock hour. So, between 7 and 8 is another hot spot for liquidity starting to be injected. So, our pre-New York opened, the market moved down, enticing people to short right off the bat, and then we've taken out the stop losses from the people who were trading the London to New York profile. So we've trapped a whole bunch of traders on this move down and then stopped them out below this low, taking this liquidity point. And if you look, we respected, like to the tick almost, this fixed value area low, which was, I believe, this range. So all the trading that happened this morning, well, not true. All the trading that happened after we dumped from London this morning, the majority of the volume, the fixed area low? Hold on. Yeah, fixed value area low. So the lowest point of the high concentration of volume, we pushed through all that. So we stopped out all of those people who had longed. All the high volume that had longed here got stopped out on this push down. So as we saw that push down happen, my momentum oscillators, we made a hidden divergence. So this low that happened here, the momentum low is lower than it happened on here. Not saying anything, I'm just building ideas, but taking the swing low that we put in this morning at London up to the high that was put in as we breached this, we got our Consolidation Manipulation Expansion. So during our retrace of that expansion, we came to 50%, which is always a good spot to see. And then on a 5, you can view different swing points on the 5-minute, but on a slightly higher time frame. Didn't quite respect that golden pocket on the 15. Maybe on the 1 hour. You can see we wicked through all of it on the 1 hour, but anyways, we reached down into multiple discount arrays. So taking an aggressive entry as we swept that liquidity could have been possible if we saw structure changing. So I believe it's this low, it's not marked here, but yeah, because it's that fixed area low. So going down to our micro time frames that I like to go on to. We unfortunately didn't get any divergences here. Oops. Lock this position. So this is our 4-hour position. We're going inside trying to refine. Because we didn't get the entry as the 4-hour broke. The subsequent entry could have happened as we took this liquidity. We could have said we didn't get a divergence here, so I wouldn't have been looking on my 5-second structure during this. But for conversation's sake, did get a micro divergence, so I guess it wouldn't have it wouldn't have lined with my model because I would have wanted to have seen the 1-minute divergences to allow me to go down to this time frame. But looking at the fixed value area low, as we came down and came very close to touching that, we made a market structure break higher, and we did that with a divergence. As we made that market structure change higher, we could have looked at taking an extremely aggressive entry, almost expecting to be stopped out. We have a gap right here. There's a fair value gap, but I don't like to take the fair value gaps. I like to take volume imbalances. Had a volume imbalance here. So you could have said, as we gapped down through here, that could have been an entry. And then with NASDAQ, I always do $2 for a swing. That's for spread, sorry. And then this was our last major swing high for this tiny microstructure. So looking at Obviously our ideas were to hold much higher, so there's nothing wrong with doing so, but the way that I trade aggressively is looking for a reaction off of this area, which you see we didn't get. We just blew right through it. So trying to hold for the high of this would have given us close to a 4R. Could have pulled out 2R, stops moved to break even. This may have taken you out depending on where you placed your stop, but with the position size, taking 2R out, that's half your trade. So even if you held your stop loss to here, that's up 2R and you're only risking half of an R. So even if you took 2R here and didn't move your stops and we did get stopped out, you would have still been in profit. You would have been 1.5R in profit, depending on spreads and how much you risked and everything else. But if you're waiting to hit that market entry down here, you're going to get a much tighter entry. It's just true. It's the way it is. But that would have been a very aggressive first take profit. If we had got our other confirmations, like the 1 minute divergence, and seen everything line up as we came down to this point, I would have maybe want to hold more for this larger swing. So looking at 50% of this larger swing, we have a small internal swing here, which you can see we didn't deviate above here. We allowed the liquidity to be held, and then we purged it afterwards. So this could have been an idea. We'll look at this in a second. There's another entry they could have had here, so we didn't get the aggressive entry because our 1 minute divergence didn't happen. But still didn't get my 1 minute divergence, so it would have kept me sitting out probably, unless I decided to get aggressive with it again. But you can see you had a divergence here again, right? As we reached down into the discount of this dealing range, as we purged. So there's a high here. As we break that high, we came down, retraced, and then broke that high again. So there's liquidity left here. And what did we do? We came down and grabbed that liquidity. So internal liquidity has been grabbed. We have a divergence, looking for a break of market structure. A break of market structure happened here. Change of character. Pulling a range up and looking for a retrace that happens inside of it. Before we even look to see where the entry is, I take my first. You could look to take one up here, but I really like this gap in here. So taking it from here, just because it's such a big gap, and it happened right where our change of character happened. So you could have had an entry, here or here, but that entry would have looked something like this. Stops at the swing low, minus $2. Right, so that could have been another potential entry as we had the retrace. And then same thing, right? We didn't take out that high up there, so that's what you would have been holding for. But at this point, we've now had the retrace. So if we come back down below, we're probably going lower for a while. I'd be looking to hold this liquidity and then look at the much higher time frame ideas at this point. You have this swing high made here as we dropped off in London. That would be a good focal point up here. And at this point you're getting an insane risk to reward, so you got to be taking some kind of profits here. But you can see I apologize, that was the wrong position to do that with, but whatever. You would have already taken profits here, right? Stops move to break even. This might have stopped you out. If you didn't put the stops break even, then you'd still be in this position. But this could have been an add-on. So if you took 2R out of this 1 to 4 that you had, or down here somewhere, if you took the 1 to 2 out at the 1 to 4, you could have risked one of those R's at every entry. Even if you got stopped out of this and this, you would have still been up 0.5R, right? So there's risk management. And then you're targeting the swing high that we spoke about a second ago. Oh gosh, so hard to still spread apart, doesn't matter. Targeting this, right? So we're coming up on that potential take profit. But this is all slightly risky because here we're about to tick into 8:30. So I haven't even looked to see if there's any news dropped today, but regardless, there's usually an influx of volatility. So we're seeing trend lines built here, right? So that confluences with the idea of coming up and taking out the swing high. Trickle down for the next few, and boom, hit that, and then make a retrace, and then we could be coming lower, take the lows like we spoke about an hour ago. But it's all ideas and things that you can do, right? So pretty crazy. But Mondays are consolidation, so be careful. Definitely no big expectations, right? Just looking to play what you can get. But LTA concepts are insane. It's crazy to see how they work, even on lower time frames. So I highly suggest looking at the same things that you would look at on higher time frames. Trying to front run sounds like an aggressive idea, but trying to front run concepts as the candles are forming, right? So that 4-hour idea that we're looking at that could be happening right now, we could have already had 2 or 3 entries into that, profits taken, stop loss to break even, and now you've got the opportunity to just ride it, right? But definitely looking for reaction here, so yeah, it's cool. Does anybody have any questions or anything I can try to look at? Keeping in mind I'm still learning here too with all of you. Trying to clean some of this up, this is very messy. Any ideas? That for now. Got our 15-minute closure above that fair value gap now. Watching continuation is definitely what I'm expecting now for a little bit, but still those Asia highs intact that I'm watching for. Oh, you've had a handful of people join. Is anybody looking at anything different assets? I only look at NASDAQ, so I can't tell you what else has been happening, but I would more than willingly take a look at something else for educational purposes. I'm just assuming my kids are going to wake me up here, or wake up really soon here, but anybody in some interesting places around the world where you get to see the... Oh, we got the big man in here. How's it going, Lorenzo? No problem, just putting in my practice, trying to learn more of these concepts. It's crazy. I thoroughly enjoy and thank you guys for dropping this ebook, because it's opened my eyes and I'm just stacking it right on top of my concepts. It's been awesome. LTA is the way to go. Were you looking at anything there this morning, Lorenzo? I know you look at NASDAQ sometimes, but I know you trade a whole bunch of different things. We definitely had a... Yeah, definitely. I'm excited to see where the group goes. Now that we've kind of got a common... Well, not that we didn't before. You had lots of information in the Discord already, but getting everybody to look at these concepts fresh, it's definitely nice to get everyone on the same page. It's easy to talk about the concepts with everybody since that's what they're looking at. I'm excited to see what everyone starts bringing to the table. We can all elevate each other, see where we can go from it. I don't want to switch the pace too much in here because I know this is the legacy side, but I've been practicing with crypto too. It's insane. Like these concepts work everywhere. You just need to be able to read between the lines and figure out what you're looking at. Wait for the reactions to happen in certain areas and stack the concepts. I was looking at Cowboy was trading this asset the other day, and I've been using this as a test because we know the concepts work. Well, I'm sure you've done testing, Lorenzo, but we know the concepts work on larger assets that have had lots of history to trade, and you can trade things like the larger volume profiles. That's something that's crazy and has just posted a few days ago. It's interesting to see that it still holds the same. I mean, like, let's just go through and try and do some things here. Like on day one, we didn't even have a full day of trading, but came up and respected the POC from the very first day, so you could have looked at shorts there, taking out the lows, which we ended up getting. And looking at day 2 of trading on this asset. It's ever going to load. Right off from the bat, we had respecting the previous day POC, and we moved away from it. And then we came back up and flipped the value area low. We could have looked at something in there on a lower time frame with confirmation to reach back up, taking out these highs, continuing the original bullish continuation. And then moved on to the next day. Didn't quite make it down to POC, but I bet you we have a swing leg in there we can take a look at. Yep, we hit the swing leg POC there, right? There's an opportunity there. This is all on the 1 hour. Obviously you go more granular, you can see a lot more. But, and then, you know, we would have had it fixed down here too. So there's some confluence at that. Yes, you're right, 100%, including the Sunday Open. Took us a little while to generate. We would have had to take this as the Sunday Open because there wasn't a Sunday to open. Oh, I see what you're saying. The new Sunday Open. Yes, you're right, 100%. Yeah, that's badass. That would have been a really strong spot to like it. I mean, it makes sense, right? Because the asset started off bullish. We wiped all the sell side liquidity here. Everybody tried to long as soon as it got dropped down to XC. And then as we flip that, you know, you're targeting your highs, and you can see, look at this big green candle. We had, you know, held for a couple days there over the weekend. You would have been good. But moving on, what else do we got? Getting into what I've looked at. Let's just delete all this for a second. It's just so cool to see that it works on everything. Like this is not something that has no trading history. This is what most people say, hey, it's untradeable. Well, it's not. You just need context, right? It's difficult. It's not easy to trade. You look, we opened, we respected value area low. Boom. There's another long. Taking out the daily highs. Reaching up into this consequent encroachment. Volume, it's all about it. It's insane. So insane to see how it reacts. It definitely opened my eyes. I looked at volume profiles a little bit in the past, but when the way that you introduced, like, you've got your major levels, right? Your dailies and your weeklies. Like, we haven't even looked at the building. We had a previous weekly, right? So to the Friday, to the open, right to there. Look at this. We're reacting off of the previous weekly value area high flip. And then there's just more confluence, right? And then you got the new one. So we have from this day. Oops, we've disappeared. So from here to where we're at right now, you know, the majority of the volume is coming in at these highs. So here's all the people trying to long this breakout, expecting new highs. Well, this is going to be a perfect opportunity to sweep these highs and potentially move down, right? Like it's a Monday. There's no reason that this can't be. We can't expand down for a couple days and then see higher towards the end of the week. Or this could be a total switch. We could see some downside for a little bit. But watching these levels, that's a big green vector candle. I expect some volume there to be retraced into today. So we've now taken out that Sunday high, the weekend high that we put in. We'll see how markets open here today. But we've got, you know, we flipped that POC, so it'd be interesting to see once we regain this vector candle and come down to the POC, how do we react there? You can see we ticked, it might not have been the low at that point, but yeah, it was. We ticked off the low here for the weekly, right? For the current weekly. And then, you know, trying to get a little more granular to see, like, maybe there's some shorts to happen here, right? Not that I'm telling people to jump in, but just saying, you know, coming back down to the value area high here, see what happens. That's also going to be the Sunday open. Respect to where we just moved, that's also going to be reaching back down to the 50% of the dealing range. Let's go down lower. That's fun. I'm a degen. I like to go lower. So if we start to go lower, we can say, let's get our previous day first. Yeah, that NASDAQ previous week POC. That's awesome. That's awesome. Yeah, we spoke a little bit earlier, Lorenzo. I'm not sure if you were here when we were talking about it, but there's a couple entry points you could have got on lower time frame that would ride this 1 hour and 4 hour idea that are building. So to see an expansion out, I've been watching this trend line developing here over the last week or so. So grabbing liquidity off there would be interesting. But trying to keep in mind that it's Monday, and we also have these equal lows down here that are right above a 4 hour swing value area low. I was watching for this to be tapped last week, and did we get the daily closure below that? We did. We got a daily closure below 50% of this OB. So leads me to believe that we could see retest of the low, if not coming down lower. We've also got this vector candle here with volume and an imbalance that are untested. So I spoke to the group about the ideas of us coming up and taking the highs between now and Wednesday, essentially, depending on what price action gives us, and we could be putting in the upper wick to a down close candle for the week. But it's definitely looking nice that we're coming close to flipping that daily open for some kind of up move this week to draw everybody in. Yeah. So we'll see. I don't like to do too much forecasting because I'm still working on my longer term bias and TA, but I like to try to incorporate it in as best as I can. I have to admit that my weakness is I have a hard time holding positions that I can't watch, so I tend to trade the sessions as I see them. And I typically I really like Thomas's candle creation theory, and I lay that on top of everything. I like to look at 4 hour, 1 hour, and 15-minute candle opens, and then I try to find my positions in there and ride the trends. But since you've showed me these LTA concepts, it's insane. When you start to stack it onto those, it gives you more calm and collected cool to wait for your moves. So for example, we're about to open another 15-minute candle here in a few minutes, so I wouldn't want to jump into a move here unless my idea is that we're going to deviate these highs and sweep back down. I'd have to look for something like that if that's what you're looking to do. But with all the higher time frame confirmations and sitting on top of, we respected the previous day value area high here with the hourlies, and then we had a fixed on the 15-minute. This range in here that we respected the lows multiple times here this morning. There was a couple entry opportunities, one that I missed, and one that I talked through and missed again. But I actually spoke to the group, and the way that I like to trade it, I didn't get my confirmations, so I would have had to have done a very aggressive, lower risk entry if I was going to do it that way. But the nice entry would have been from, you might cringe when I say this, Lorenzo, because I know you like to keep the Model 1s to the higher time frame, but it's looking like there was a very nice 5-minute entry down here as we purged down through take the sell side of Asia. We had an expansion up to 50%, and then we retraced back down to the discount of that range, and then we had we respected, you can see like mint, this previous value area high. We flipped it, and then we respected it. So there was actually, in my opinion, a model entry 1 that could have happened there. Yeah, 100%. No, that's the key right there. Yeah, no, I definitely, I just don't want to start making everyone looking at 5 minutes, because it's definitely a much higher, from my back testing, the 4, 1, 30, and then even sometimes the 15 are much higher. Yeah, nothing's guaranteed, but it's a much higher win rate as opposed to just taking every time a 5-minute candle respects it. But you know, obviously it doesn't matter when you start to layer all the liquidity matrices on top of each other and the higher time frame concepts, you know, because this 5-minute candle respection here was the beginning of the 1 hour that respected it, right? So front running the idea that that's going to hold, the 5 minutes were indicating that, and then we looked at this consolidation this morning that happened after that idea. And I don't have the volume profile here now because it's in hindsight, but we had respected the lows again of the fixed value area low here, creating another potential model entry, stops below the low, and then as we retrace down to here, so we had a consolidation, a manipulation, an expansion, and then a pullback before our continuation. And in hindsight, we talked about it all morning long, but it worked out perfectly, right? We watched for the break of this. I didn't get my entry confirmation that I wanted on the lower time frames, but just looking at LTA Concepts, you could have had an entry here, right? Wick, wick, candle flip, and then as we flipped past the close, you could have had an entry off the 5 minute. So it's insane to see. You guys did a very good job putting everything together. Thank you very much. Going new 15-minute candle here. We've already put in a little bit of a wick there, so that could be the continuation that we're going to see for now. Let's see if we can get any more profiles to tell us some stuff. Like we flipped that swing POC. We had a bit of a reaction off of it. Now we're pushing up to the value area high. We just broke it. Now we're approaching that Sunday open. That's insane. Like realistically, if you're conservative and you use a lot of risk management, there's non-stop entries all over the place. It's just a matter of what your style is and what you're looking for. And obviously, taking something in the middle of the range or towards the upper range, you're taking a lot more risk because you can see retraces down into this leg. Because especially with NASDAQ, it likes to pull liquidity. It doesn't like going in one direction all the time. But interesting to see. For the time being, we're respecting that high there. I don't know what it is, but oh, this was the swing high that we drew out from before. So before I started recapping, we had looked at we were talking about some ideas way back in the past and we missed this. Sounds good, Lorenzo. Thank you very much. I appreciate that a lot. I do. I'm excited to see what everyone else does, and I'm hoping to start linking up with some people soon and be able to help do some workshops and stuff, because I feel like there's a lot of potential in this Discord. There's a lot of people who are attending every day, and if there's other people who are willing to put in the work, I think we can all reach that echelon of profitability. Does anybody else have any questions? I'm going to be jumping off here in a few minutes. I'm surprised my kids have allowed me to sleep. Or I keep saying sleep, but I'm surprised my kids have stayed sleeping this long. I'm definitely going to have to jump out here soon. So is there any questions anybody has, or any last minute reviews they'd like, or anything? Look at that, pushing right up to there. That's insane. This would have been a nice position. Position 1, position 2 would have been taking profit at the swing high here, which we eventually got. Definitely was a handful of positions to have taken this morning. And again, just for transparency, you know, I'm doing all this talk, but being able to recount that it's only one thing. I tried to get into an entry. Let me check, so I'm not talking out my butt here. Let's review. Right there. There's an entry that I was looking at that I didn't get that I wanted. And stop right here. I tried to get into an ad here on the first position that would have got stopped out. So that was my 2 attempts for the morning. I wanted to see a situation build in here that I didn't get, but you could have taken based off just the LTA concepts. I think it was 5 minutes. Yep, 5 minutes. So we wicked down into that, fixed very low, wicked down again, candle close, and then we moved up from there. So that entry would have been, you would have still been running in it, and you would have just taken your, to me this would have been a terminus target. At least not take like 90% off, because you can see we're getting a reaction off of there. So, you know, but we've now taken liquidity, we've now taken a lot of liquidity from the morning. So asking what's going to happen next from here to here is a lot more risky. We've had a pretty much straight up move here. There's definitely imbalance down here that can be revisited. Even just here locally before we get any other move. But we still don't have any crazy divergences, so I'm kind of expecting us to come up higher. Anyways, I'm going to let you all go. It's been a pleasure talking to everybody this morning. I hope everybody does well today. Hopefully I can catch you guys for a later session. Thanks.